Hello and welcome to Specialist Lending Solutions Television in association with Roma Finance. I'm Owen Thomas, Editor of Specialist Lending Solutions. Joining me on our panel today are Nick Jones, Commercial Director of Roma Finance, Harry Landy, Managing Director of Enterprise Finance, and Joe Aston, National Sales Manager at Vantage Finance. Thanks very much for joining me, everyone. So, with so much upheaval through our lives over the last year, it appears the nation's high streets are going to be undergoing some significant changes. With expectations to shift away from retail to mixed or greater residential use, that means possibly more semi-commercial conversions. So Harry, considering that, what are the key aspects investors and developers should be looking for in a semi-commercial conversion?
Well, I think probably the considerations for a semi-commercial property are probably the same as what a developer should look at on any project that they look to undertake. So the first one would be the location of the property. Most successful developers tend to develop in areas that are local to them, that they have good extensive knowledge of the area and the demand for the properties and the types of properties that will be in demand from the local residents. You need to look at the cost of the project. So what's the cost of entry? What will be the cost of making the renovation or the refurbishment to the property? And what impact will that have on the overall value of the property? Then consideration needs to be given to the what your plan is to do with that property once the works are completed. So will it be your intention to sell the property? And if so, what would be the market value of the property's for saleability? If your intention is to hold the property and rent it out, what sort of rental income will be achieved by that property? And that's going to have a major impact on your ability to refinance and pay off the development or refurbishment finance that you have in place. So I would say they're the main considerations to look at. And ensuring that you do your research prior to taking on a project. Make sure your architect or your builder comes and has a look at the property with you, just to make sure that it is a commercially viable option.
Thanks for that, Harry. Nick, from your point of view, are there any planning or lending rules which are particularly important or catch people out in this situation?
No, I don't think there's anything sort of to sort of catch people out. I think the planning rules are more relaxed. But that still doesn't cover all property types as well. So ensuring that the property and the plans of what you're looking to do fall within the permitted development rights and the conversion from residential to semi-commercial, commercial to semi-commercial as well. Also be mindful of the types of property that you're actually building. Like Harry said there, having a look at the types of businesses and the demographic of the customer within that area as well, making sure that what you're looking to do actually fits within the environment around it as well. If the property can't be mortgaged due to, things like kitchens and uninhabitables, things like that as well, then ensuring your customers have alternative options as well. The use of a semi-commercial premises or a mixed use premises is really important as well. So, whether you're looking to refurb and hold it, or you're looking to sort of refurb and just sell it on, actually having the understanding of what is in that area, what does that area sort of need, whether it be services, whether it be hospitality, whatever it might be as well, making sure that the property that you're converting to, whether it be for a resale factor or whether you're looking to rent it out, keep it in the portfolio and rent it out, it has multiple uses as well. So you'd be, inviting more buyers and more investors to come into it as well. The properties can be picked up at auction. They may have tight deadlines as well. So making sure that you can keep to those, whether it be funding deadlines, if it's bought at auction. Or the lenders at the moment, we talk around, things are elongating, timescales about purchasing properties are going on, whether it be through the working from home of the solicitors, the searches, lenders, and the timescales are elongating, the pressures from the stamp duty tax break, etc., on solicitors, etc., as well. So we've got to be just mindful of deadlines as well, and making sure that you're working within a realistic time frame, something that's, if someone is looking to do conversions, if it's 3-6 months, it may go on for longer. There are things which are stopping projects from progressing smoothly, whether it be things like materials or workforces on sites as well. So just being mindful of deadlines is a big thing as well.
Thanks, Nick. And Joe, from your perspective, where brokers are maybe looking into the commercial lending space for the first time, what are the key things that they should know when doing so?
It's probably the most difficult time to ask that question, because in the last 12 months, commercial lending has been a sort of ever-changing and rapidly shifting landscape that it is very hard to really get to grips with. I think if we take the uncertainty of the current commercial market out of the equation for now, for the purposes of this, I think what people need to understand is that there is a greater level of due diligence compared to, let's say, a standard residential buy-to-let. And although there are comparables when it comes to debt service cover, and it's ultimately rental income versus property value or loan amount, but actually there's so much more to that. You want to keep an eye out for strength in the tenant, strength in the lease, and whether there are any break clauses, and actually is there a strong covenant on that site. How is the payment history in the last 12 months? Because crucially now that's vitally important. How is the area actually having, it's the same with the conversion and the development piece. Knowing your area when you're investing from a commercial perspective is so important, because ultimately you'll be lumped with, a pretty difficult asset to shift if it turns out it's not in an attractive area with an attractive proposition around it. So understanding the property and the industry is vitally important, and also understanding that your lending might not fit with the high street, particularly not right now. Again, brokers' jobs are to set clients realistic expectations and make sure that you have an understanding of the current market value in terms of interest rates, because they are a little higher. And actually, if they're used to a residential mortgage at 1 point something percent, they're going to be pretty surprised at a potential commercial mortgage at 5 point something. So understanding that's vitally important as well, and setting their expectations. Similarly, you need to have an understanding of the difference between an owner-occupier mortgage compared to a commercial investment. So understanding that it's a very different proposition if the company that is operating within that business is buying the site, and you need to get a really good understanding of their accounts and how their sort of financials look before you even approach a lender. So if in doubt, consult the experts. Commercial lending is a specialist part of the market with specialist lenders and specialist brokers that specialize in this to give your customer the best journey they can possibly get to source finance. So utilize the help, and hopefully you'll have a successful result.
Thank you for that, Joe. And that brings us to the end of this session. It seems there's going to be plenty of demand for specialist property finance in the coming months as our towns and cities evolve. And understanding the likely needs of clients is only going to be able to benefit brokers. So thank you very much to the panel for their insight. Thank you very much to everyone for watching. And we'll see you again next time.